Hey everyone, I'm back. It's Fundamental Friday, and today we're covering Pepsi. Before we jump in, I wanted to give you some background as to what these one-pagers are trying to do. It is a snapshot of the financial stability of the company, kind of where it's at in its health. But overall, I actually developed these to answer four questions because it's so intimidating when you're trying to evaluate a company, especially as a new trader or new investor. It's hard to know what to pick, like which company over what. So in my exploration of trying to figure out what to do for myself, I actually came up with these one pagers. And it's really to answer a few questions. Number one, what I'm trying to do is evaluate whether a company is worth investing in. Now, I know going into that, there's a lot more than just what the financials say. There are the things that you can't quantify, but at least this gives you a snapshot of the financial health at a point in time. So it's just one thing that you can look at in the overall evaluation of a company. So question one, is this a company worth investing in or trading in? Question two, the most obvious one, is if it is a good investment, is it at a good price? So that's always kind of relative. You can make all kinds of arguments. There's different formulas to figure this out, but that's the second question that you're really trying to answer for yourself is this a good price now? Do I wait? Do I buy now? So those are the two questions that you have when you're first trying to figure out whether you want to invest in something. Third, which you can't really do, the third question is not related to the company itself, but more about the wheel strategy and earning income. So the third question is this a good income stock? That you can judge by basically figuring out the ROI, whether you're doing it weekly, monthly, whatever. That ROI is what's going to tell you, is this a good company to run the wheel on or just sell puts on or whatever. And finally, the last thing is I have this information on this one stock, but how does it compare to a second stock? So the overall theme of the one pager it really was for me to create a scoring system so I could compare apples to apples and understand what the ROI could be, what the investment potential is, where it is in value related to its current price. So those are the main questions that I'm trying to answer with these one pagers. So that gives you some backdrop as to where this came from, why I developed it, and why I think it's a powerful tool in our arsenal of trying to figure out how do I invest in the stock or trade it or whatever. So Pepsi, let's jump in. Up top, you see, I actually pulled this report, I don't know, a few days ago. So the 158 is probably wrong. This is actually built in a spreadsheet, which I then screenshot and provide screenshots to our group. Up top, just the normal information that was available at that time. Nothing crazy there. The first area that really you want to focus on is gross revenue. My personal preference is that I want to see gross revenue beating SPY or QQQ, preferably both, because that's where you're going to get your stock appreciation if you're a long-term investor. If you're not, gross revenue basically is if the growth of the company is not beating SPY or QQQ, in my opinion, I don't want to invest in it. Doesn't mean I can't make some money off it if it's down far enough. But as a long-term investment, I tend to avoid anything that's not beating the SPY or QQQ because I could just put my money in those and call it a day. In this case, you can see I have a projected growth rate of 0.88, not the best. So while this is a decent company and you can see gross revenue has grown over the years, it doesn't grow very fast. You can see they had one spike in 2021. I guess that's when everyone was at home. And it's been declining ever since. And so this past year, they grew year over year at 0.42%. So that's the reason why I got a 5.7 or 5.75 out of a max of 50. While it's still growing, it's just not growing very fast. Gross profit margin, you can see projected gross profit margin of 54.25%. The average is 54.52. So it's actually under the industry average. Not necessarily something I would like. I want to see the profit margin higher than industry average. So again, another kind of not a red flag, but it's not something I would be looking for for a company. Net income margin, again, same thing. It's below the industry average. Projected net profit margin of 10.58% versus the industry average of 13.73. Again, falling behind the industry, not exactly where I'd want it to be for an investment. Now, going back for a second, on the gross profit margin. Gross profit margin is basically what's left over after the cost of goods sold. So that includes all your materials to build the products back on net income. Operating income, and margin. You can see it's 14.37%, well below the industry average. While operating income is growing, their income margin is actually shrinking each year. So that's the reason for the 4.75 score, something that would be a kind of a red flag for me. Finally, the second most important thing for me is free cash flow. Once again, projected free cash flow is 14.75, well below the industry average. I do like to see a lot more free cash flow because that's what allows a company to expand and grow, maybe acquire other companies. So not the best score. They have quite a bit of debt. It's not quite one for one, but it's pretty close. And they have a lot more debt than their cash. So not great, but it's not terrible. Let's take a look at the expected income. So if you're running the wheel on this, you can expect close to 12% annually. If you do own shares and you're selling calls, you do collect that 3.51% dividend plus your 11.66% premium for calls annually, giving you a income of 15.17%. It's not bad. So if you actually own this and want it as a dividend stock, it does continue to grow. It does pay a dividend, and you can earn some income off of it. If you're looking for a long-term investment that is going to appreciate your money, so you want your money to actually grow, this probably would not be your stock. Overall, I've got a fair market value of 192, which at the time when I printed this, the current price was 158. So it's got some upside potential based on the fair market value. I don't think it's a whole lot. I think there are better stocks out there. So in my opinion, I would not be interested in investing in Pepsi. You might make a case for it as a dividend stock because you can make, 15% annually. But that's just barely above just throwing your money in SPY. So with a score of 63.25, I would say Pepsi is a pass. I hope this gives you some insight into Pepsi. If you're enjoying these Fundamental Fridays and the one-pagers, please be sure to comment below, throw in the ticker symbols that you want to have me look at for you. If you're part of our Patreon group, either level 2 or 3, you can request these ad hoc. So you just throw it in the channel. I go out and print these out, put them in the channel for everyone to see, and they're pretty useful. So you could compare this to, like, say, a Coca-Cola, and if you're trying to make a decision between the two big beverage companies. So food for thought. Anyway, hope you enjoyed this. Thanks very much.